Does the Black Rifle Coffee Company have the right energy to create public market gains? In early November of 2021, the Black Rifle Coffee Company announced its intention to become a publicly traded company through a special purpose acquisition company, or known as a SPAC merger. This proposed business combination would put about $225 million on the balance sheet of the brand, which would be utilized to further its growth initiatives. The valuation of the company would be somewhere around $1.7 billion, or approximately 4 times the projected 2023 revenues. This would actually be the third IPO of a coffee seller in 2021. The other two, Dutch Bros and JAB holding company Krispy Kreme, also went public. But if you're grouping all of these coffee sellers together, I think you're going to make a big mistake. Want to explain a little bit around the founding story. I believe it is a great foundation for future growth, but also explains maybe how the company has been able to grow so quickly in the 6 or so years of its existence. The founding story is filled with early category inspiration, some business failures, and business pivots between the co-founders of Black Rifle Coffee Company. So kind of the main co-founder, Evan Hafer, his love, at least from a hindsight 2020 inspiration of coffee, came from him associating black coffee with his father, his maternal grandfather, that were both loggers, where they would head off with a ton of coffee in their heavy thermoses. Later on, Evan Hafer's interest in coffee grew during his time in the U.S. Army Green Berets and continued into his time when he worked in the CIA. His extracurricular hobby would sometimes come up in conversation with people that he worked with in the CIA, one of those being Jeff Kirkham, which was a fellow former Green Beret and CIA operator. When Evan Hafer started to throw around the idea of leaving the CIA after 9 years, his wife at the time was working at a Denver coffee shop, and Evan Hafer started to think about maybe he would run or maybe own and operate a coffee shop in the future. So this is where the category inspiration comes from. Now, talking about maybe the business failures, Evan Hafer and Jeff Kirkham decided to start a business. That business was a tactical firearms version of Kickstarter, because Kickstarter does not allow those types of weapons on their platform. And though this business ended up failing, the two decided very early on that one of the main kind of drivers of success during the mid 2010s is that you were able to create great content and have a great distribution model through the social media networks. Now, where some of the other co-founders kind of come in is that Jared Taylor, in his early interest in filmmaking, and Matt Best, with his early successes as being a YouTube personality with some comedic content that resonated with combat veterans. They ended up teaming up. They ended up creating a ton of momentum with that YouTube channel. And to monetize it, they started a clothing company called Article 15. That success of the YouTube channel, the content, also the clothing company, got the attention of Evan Hafer. They ended up meeting. And in late 2014, Evan Hafer said that Article 15 should offer a kind of one-time coffee product for Black Friday. The product ended up selling out in a few days. People really enjoyed it. They wanted more of it. The problem was that Evan Hafer really wasn't set up for that type of production. But regardless, they thought they had something here with some social media strategy and kind of starting to create some videos with Richard Ryan, which was helping Taylor and Best do some of the content and strategies with their media, YouTube channel, and clothing company. The coffee company started to reach the velocity of the clothing company very quickly, and it wasn't long before the coffee started to outsell the clothing's best days. So the Black Rifle Coffee Company officially started in 2015. And by October of that year, they already had somewhere around 80 employees and were doing between $20,000 and $30,000 in gross revenue daily. So now that you kind of understand some of the founding story, understand, the foundation of the Black Rifle Coffee Company, I want to dive in a little bit around the financial data right now. The Black Rifle Coffee Company's authentic brand and enthusiastic customer base have driven impressive financial results. In 2019, the revenue was $82 million. The next year in 2020, the revenue doubled to $164 million. Through the first half of 2021, revenue was $96 million and is expected to reach $230 million throughout the full year of 2021. Gross margins have hovered in the low 40s, but in 2021, it's projected to be its lowest. It's been at 40%, primarily due to inflationary cost pressures, tighter labor market, and supply chain challenges. If we break down the revenue by channel, this is in the first half of 2021. Direct-to-consumer made up 75.5% of total revenue, and it grew 41% year over year. Wholesale made up 20% of total revenue, but it grew 205% year over year. And then the Outpost, but had 651% year over year growth. In 2023, the revenue by channel is projected to be much more balanced, with direct-to-consumer accounting for 43% of total revenue, wholesale being 35% of total revenue, and Outpost accounting for 22% of total revenue. To better explain maybe how this progression of revenue is going to happen, I want to talk about 5 main reasons why the Black Rifle Coffee Company is unique. Most lists about why a CPG brand is unique would start at how great the product is. And I'm sure the Black Rifle Coffee Company is great. It has a great product, but I don't think that alone is a defensible competitive advantage that creates uniqueness in the market. Having a great product is only the entry fee in today's ultra competitive CPG industry. And by the Black Rifle Coffee Company having huge year-over-year growth and strong customer retention rates, the company has proven that it has a product that meets or exceeds the market's expectations. What makes a CPG brand successful today is really what is built off of that great product. The first reason that I find the Black Rifle Coffee Company to be unique is surrounding its mission-driven brand that has been able to find an extremely loyal customer base. Coffee is a great daily routine-based category, but the Black Rifle Coffee Company brand is much broader than coffee. Consumers today are increasingly choosing companies that align with their values, and the Black Rifle Coffee Company is a veteran-founded coffee company with an incredibly loyal and quickly expanding community of more than 1.9 million lifetime customers, 270,000 plus active coffee club subscribers, and a large and growing social media following. Since its founding, the Black Rifle Coffee Company has had an unwavering commitment to supporting active military, veterans, first responders, and those that love America. The Black Rifle Coffee Company does this through donations to active duty service members, philanthropic donations to community organizations, and the employment, education, and training support for veterans. Additionally, a portion of specific Black Rifle Coffee Company's product sales are donated to law enforcement, first responders, and firefighter causes directly. The brand's mission is the reason for being and core to everything it does, to the level that the Black Rifle Coffee Company plans to reorganize as a public benefit corporation. Veterans account for about 7% of the total U.S. population, but their underemployment rate is much higher. They suffer from more mental health issues, with approximately 20 veterans committing suicide every day. There are also around 50,000 homeless veterans. The Black Rifle Coffee Company has been working with a number of veteran organizations who are providing help, but now going public as a public benefit corporation will allow us to create more jobs for veterans and help them become business owners. This is why the Black Rifle Coffee Company was started. The second unique reason that I want to talk about is the massive direct-to-consumer success and some of the subscription model metrics for the Black Rifle Coffee Company. As I stated earlier, the digital channel does make up the vast majority of the current revenue for the Black Rifle Coffee Company. And the subscription business has grown at a 218% compounded annual growth rate since the company's inception, and includes 270,000 plus active coffee club subscribers as of the end of first half of 2021. The subscription business provides a recurring revenue stream with strong customer retention, as evidenced through a monthly subscriber churn rate of approximately 3.5%, which is well below the industry average of approximately 10%. I always say that direct to consumer is more than a sales channel, it's a relationship with customers. Black Rifle Coffee Company utilizes a three-pronged strategy to engage its community through high-quality content. The first prong is through informing them, and the company wants the audience to love coffee as much as they do. Educational content focuses on coffee history, sourcing, and preparation techniques. The second prong is around inspiring, and they do this through stories of active military members, veterans, local heroes, and other uplifting stories. In many ways, this is the beating heart of the company and aligns with the bigger why and purpose. And then the third prong is around entertainment. This is usually top of mind when consumers think about the Black Rifle Coffee Company's media, and the audience loves the brand's humor, action content, and the podcast that covers adjacent topics that speak to the American dream. Another reason that I think the Black Rifle Coffee Company could be a unique brand in the market surrounds their ready to drink coffee expansion and its growing wholesale potential. While there's already been some successful indicators in this area, I still think this is one that has a ton of untapped potential. And the wholesale potential and the RTD's expansion go hand in hand for the Black Rifle Coffee Company. Its wholesale business includes current partners like Speedway, 7-Eleven, Sam's Club, Walmart, HEB, and Sheetz, to name a few. They also sell into lifestyle retail outlets like Bass Pro Shops, Cabela's, Scheels, and 511 Tactical. The Black Rifle Coffee Company's ready-to-drink coffee beverage product is available in more than 33,000 locations currently in the U.S. and has grown to be a top 4 brand in the $4 billion category since its launch approximately 18 months ago. There's also a lot of runway left in both current and new retail expansion, having 50% penetration in existing retail partners and the 11-ounce RTD products being in less than 20% of convenience stores and the 15-ounce product in less than 10% of convenience store. That could bring the total potential opportunity to be around 375,000 doors across convenience, food, drug, and mass. While that door potential is lofty, the Black Rifle Coffee Company can also grow substantially by increasing volume per outlet, primarily by adding SKUs to their existing distribution points. Another main reason for the uniqueness of the Black Rifle Coffee Company is its use of experiential retail through its Outpost expansion. As of the first half of 2021, the Black Rifle Coffee Company does have 7 of these outposts, including 3 that are company operated and 4 that are franchise locations, with 9 additional locations expected by the end of this fiscal year. The outposts provide an immersive retail experience for the Black Rifle Coffee Company's customers, including showcasing its brands and premium products, and also building deeper community commitment to its purpose. The early outposts do have some interesting economics. The check average is around double the average of its competitors. The prototype stores have generated an average unit volume of $2.5 million, which is among the highest for coffee and beverage-focused concepts. It targets a 4-wall margin of 25%, build-out costs of $1.4 million, and a cash-on-cash return of 45%. The Black Rifle Coffee Company believes they have a long runway to expand these outposts, estimating the near-term white space opportunity of approximately 1,300 locations. Just to give some reference, Starbucks has more than 15,000 locations in the U.S., Dunkin' has more than 9,600 locations in the U.S., and the total coffee shops in the U.S. is around 37,000, so this would be expanding the market around 3.5%, not counting the assumed closures. Black Rifle Coffee Company will start slower, with 78 outposts open by the end of 2023 in 9 priority markets, mostly corporate-owned locations. And the current franchisee partnership selection has been really focused on either longtime business associates of the Black Rifle Coffee Company or military veterans that have relevant business experience. Beyond 2023, the Black Rifle Coffee Company thinks these outposts should be less than 25% franchisees. So they're going to still keep a lot of these corporate owned. And then the last and maybe arguably the most important reason why I believe the Black Rifle Coffee Company is unique is that it has strong founder market fit. Now, Founder market fit doesn't necessarily show up directly on financial statements, but I'd argue that it's one of the most important business metrics for long term success. Founder market fit basically means that the founders have a deep understanding of the market that they're entering, but also those that personify the product, the brand, the purpose. And this is exactly what the Black Rifle Coffee Company is. It's veteran owned, veteran led. Approximately 50% of the employees are either veterans or spouses of veterans. And its mission is to have a massive positive impact on the veteran community. And premium coffee and content is going to be the conduit or the vessel to do that. This is the founding team's passion, and every decision is perfectly aligned to this overall mission. And you can see this with the top 3 reasons customers purchase Black Rifle Coffee Company products. First, they love that the company supports the military and veterans. Second, it has great tasting coffee. And third, the brand is aligned with their values. And as I mentioned in the introduction, there would be about $225 million in new capital that would be placed on the balance sheet of the Black Rifle Coffee Company. Kind of went through some of the strategic uses for that money, including to drive more brand awareness to its direct-to-consumer business, expanding its wholesale distribution through its ready-to-drink product line, extending its Outpost footprint, but also investing in capital expenditures around technology improvements to its website and mobile app, and then also utilizing that money to hire more veterans. Now, I do want to talk about maybe some of the trends that have been happening around food and beverage CPG brands, and I don't necessarily want to lump Black Rifle Coffee Company into what maybe has been happening recently, but I would be remiss maybe not mentioning at all maybe what has been happening over the last maybe 18 months with about a dozen food and beverage CPG brands that have went public, including Vital Farms, Utes Brands, Laird Superfood, Tattooed Chef, Strive Foods, Oatly, Zevia, Vita Coco, Dole Foods, Sovos Brands, and Thorne Health Tech. And the vast majority of these IPOs at the time of recording this content were below that IPO price. Now, the fact that these companies have fallen below the IPO price doesn't mean that they are a bad company, and it doesn't mean that they won't create long-term stock market gains. It just means right now that maybe we're overpriced at their IPO. That doesn't necessarily have any relation to it being a food and beverage CPG product. Just means that there's some things going on in the stock market right now in terms of it being frothy. And you can't fault these companies for going public and being overpriced, because that is kind of the name of the game. If you are planning to IPO your business, you want to do that when the markets are hot rather than wait until they're less attractive, because you're not going to get as much additional capital for your various business needs. So as the markets maybe normalize, maybe we see less IPOs or SPAC mergers, I think naturally some of the valuations and things will start to go down. Don't know when that time will be at, but just wanted to make sure I mentioned that so everybody was aware. But I do just want to end on some final thoughts. As the premium coffee market has been built out further by Starbucks, it's matured. Consumers have started to look elsewhere and started to maybe try to attach themselves towards brands that speak to them directly. They have a more emotional connection, brand affinity to those. So to stand out, these new competitors like the Black Rifle Coffee Company would not want to directly compete against Starbucks. They would go and try to carve out some of those niches and speak to certain demographics or geographies. Yes, the Black Rifle Coffee Company definitely operates within an extremely competitive space, but which business doesn't do that in today's marketplace? The Black Rifle Coffee Company looks to be in the early years of a long-term growth story. It has an exciting and growing brand, an early RTD business with lots of runway in the wholesale channel, and an exciting Outpost model. Glue all that together with a purpose-driven brand strategy and a leadership team that has a relentless dedication to execution. And it's hard to imagine the Black Rifle Coffee Company producing anything less than positive results long term. If you enjoyed this YouTube video, hit the like button to support me. Another way to support me would be hitting the subscribe button. I do have a goal to reach 2,000 subscribers very soon. And about 4/5 of you that are watching this video right now are not subscribed to me. So please consider doing that free, quick action so I don't cry myself to sleep at night anymore. But I do just want to thank you guys for tuning into this video, and I'll see you on the next one.